can see every commercial activity is being carried on with the help of finance or loans granted by the banks and financial institutions. Also, even many consumers who are going to purchase houses, vehicles, consumer durables, and everything, whatever they want to purchase, they are expecting loans, financial support as a loan from the banks. Now let us see what is the main area of loans granted by banks. Bank loans to service sector surpass the credit given to industries. It means the more loans given to service sector than loans given to industries. This is the outcome of data made on the data available. Bank loans to the service sector have surpassed those to the industrial segment for the first time, establishing that the farmer will be contributing more for incremental growth and that the latter is still not biting the bullet when it comes to capacity expansion. Means more bank loans were used to the service granted to service sector to increase the incremental growth, whereas the sufficient loans were not available to industry sector to enhance its capacities, manufacturing capacities. The outstanding loans to the service sector at 133.15 lakh crore increased by 21.3% in 1 year. Outstanding loans to the industry sector rose to 13.8% in the same period to 13.94 lakh crore. It means the loans given to industry sector are far less compared to the loans given to service sector. The expansion in credit to the service sector has largely been driven by loans to non-bank financial companies. The more loans were given to service sector through non-bank financial companies may not be directly by the banks but through the non-bank financial companies, means more finance made available to non-bank financial companies to extend loans to service sector. Confidence improved towards the non-banking finance companies. The credit growth see a reflection of that. Because of the improved confidence on non-banking financial companies' performance, the banks has extended more and more financial support to the non-bank financial companies to extend more loans, liberal loans to service sector. NBFCs have a very large credit segment, especially volume-wise, and the economy picks up, you will see that segment grow larger and larger. Non-banking finance companies are extending finance with the help of loans received from banks to many service sectors, so that the opportunities are improving for non-banking finance companies, as well as the credit volume is also being increased to service sector through non-banking financial companies. Lending to non-banking finance companies now constitute 10.2% of the outstanding non-food credit. Of the incremental accretion of 5.89 lakh crore in the services vertical over the past 12 months, 52% was towards non-banking financial companies and 22% towards other services. Lending to non-banking finance companies constitute around 10% of the total credit granted by the banks except non-food credit, means non-agriculture credit. The incremental accretion of 5.89 lakhs crore was major portion was given to non-banking financial companies to support to lend to the service sector. Among non-banks, loans to mainstream financial institutions were up by 88% on the year end, to housing finance companies up by 16%. Means during the year, the loans to mainstream finance institutions were increased by 90%, and for housing finance companies increased by 16%. Incrementally, after running down high risk assets and consolidating for a whole, NBFCs are now pushing growth opportunities in a risk calibrated manner. Since many of the NBFCs are reaching more number of consumers, incremental growth is increasing. The incremental growth in finance given to NBFCs is also increasing, because the NBFCs are finding opportunities in risk-based in a calibrated manner. Bank lending to NBFCs to rise in 23, unlike the deceleration seen in the recent past. Because of the pandemic situation, there was a reduction in loans given to NBFCs, but after the pandemic situation over, the banks lending to NBFCs is also increasing in the year 22-23. NBFCs increased the share of bank loans to 20% in September 22 from 19.5% a year earlier. Earlier, the non-bank finance companies used to, from loans by NBFCs from banks has increased from 19% to 20% in the month of September compared to the last year. Highest shift was visible in Aptus and Mahindra Finance, which saw the share of their bank loans increased by nearly 15 percentage points of September 22. Major share of NBFCs, loans to NBFCs, major portion of loans to NBFCs was given to Aptus and Mahindra Finance, which increased their loan receipt from banks. Owing to the funds from the banking system, diversified NBFCs have grown at the fastest pace at 23% on year, while vehicle finance NBFCs delivered 15% growth. Diversified NBFCs could finance to diversified sector, maybe household consumer or any other durable consumer household, many other services. The fastest pay the diversified NBFCs have grown at the 23%, while the vehicle finance has increased by 15%. NBFCs have clearly shifted to borrowings to banks from commercial papers and non-convertible debentures, as bond yields and short-term rates increased in the last 4 quarters. The NBFCs are preferring to borrow funds from banks when compared to whereas earlier the NBFCs used to accept loans through commercial papers or non-convertible debentures. Because of the increase of interest rates, the commercial papers and non-convertible debentures has become costly when compared to the loan availed from the Reserve Bank of India. Hence, the majority of the non-bank finance companies preferring to take loans from banking institutions rather than commercial papers or non-convertible debentures, because the rate of interest is increased recently. Because of the more finance extended to non-bank finance companies, there is a lot of improvement in finance provided to service sector through non-bank finance sector, whereas the industry sector, the loans given to industry sector has been not that much not that much improved compared to the service sector. The industry sector needs lot of financial support from the banking sector as well as the other financial institutions to improve its working capital position as well as to expand its manufacturing capacities. These are the opportunities available for many banks and financial institutions to extend more finance to industries, to create wealth, to expand its manufacturing capacities. And the scope is possible to be filled up by the banks only. We cannot expect the industry sector be financed by the non-banking financial companies.